What's up, team? This is Ruben from TGE. In today's video, I want to break down how we found the best strike price for our MDB bullish trade. Okay, and on Monday, I said that we were bullish on MDB due to a consolidation breakout, and I'll go over the chart on that and just the process on how we took the trade. This is a trade that was alerted inside the TGE Max community. Which again, if you want access just to trade alerts and option picks, I'll put a link in the description box. So if you want to check that out. Okay, so this is what happened. Instead of getting a 30% return, we actually ended up getting a 49% return on MDB, and we picked a 220 strike May 16th. Okay, and again, I'll just go over the thought process, what we were thinking, what we saw, how we prepped, because a lot about trading is just really just prepping and then taking action on that, on the execution, on the thesis. Okay, so I want to show you, today is Wednesday, so the data has changed completely. But the first thing that we look at on MongoDB is we try to figure out where are key levels based on gamma exposure, Vanna exposure, and also the gamma profile in general. Okay, so, but most importantly, because the VIX these last couple of weeks have been, or months really, have been such a volatile environment that we also want to take a look at the expected move. Now, I'll give you an expected move formula right here. Actually, I wrote this down here, which is uh, at the money ask price call plus the at the money ask price put. You add those together, and that's a basic expected move formula, a straddle method for you to get like an expected range for a given expiration date, right? But Gextron, which is our tool, we takes it a step further and includes implied volatility. It uses the Black-Scholes model, and you can see here that when we open up this expiration date calendar, we look at all the expirations. We say, okay, March, the week of March is at the moment 2 days left, right? And as of right now, you can see here that it's 8:18. Okay, this is the expected move. It says a little plus and minus, so this is to the top and to the bottom. At the time on Monday, this was a about a 10 or 11 point move, and what we do with this value is that we add it with the spot price, so the top and the bottom, and that gives us an expected range. So now we know what the playing field kind of looks like for MDB. And if I go to the chart here, okay, if I go to the chart, these are the original values for MDB here, which the weekly expected top at the time was 197 and 174. And what I want to do is I'm going to go back here to this time frame because this was Monday's price action, and I saw that we're consolidating, right? We've been moving sideways since Thursday, which is good because this doesn't mean that I'm going to have a bullish thesis right away. I just want to know what's possible. What's the range for the bottom and for the top? And once it starts breaking out of consolidation, then I'm going to pick that side. I'm going to go take a shot at that given side that's being broken out of. And so when we saw that price was picking up to the upside and with strength, okay, we said, okay, the weekly expected move, here's a key level, 190 was a key level at the time for, that was, Gextron was telling us, and the weekly expected move was 197.58. Perfect. As it was approaching this area and volume was picking strength up around this zone right here, right, which was 2 p.m., we took an opportunity for MDB calls for May. Okay, the idea is to get far enough. You don't want to get caught up with intraday movements, especially with this kind of market environment where we were above like the 10%. we were like somewhere in the 20s on the VIX level. What you want to do, or what we like to do, is we like to get 60 to 90 days out to give us some buffer time. We know what the target is. Now, I did get a far out of the money strike, right? But for the given expiration, that actually had like about a 38 delta at the time, I believe. And this was the sweet spot. So it doesn't mean that we have to get in the money or has to be there by that time. We just sold right away. As soon as it got close to the weekly expected move, that was the target. And now we can sell our target, right? We can sell our contracts and move on to a different trade. But that is what caused this move right here and these price targets, right? By using the weekly expected move, we were able to target a realistic range for within the week. Okay, and at the time, this became a day trade, which was good due to the volatility, and there's a lot of price expected movement. But if this was a normal market environment, maybe it would have been a day or two for a short-term swing trade. All right, now I want to show you what happened the day after. Okay, so we're gonna just jump a couple times here. Okay, you can see here. Actually, I'm just gonna cancel this. You can see here that literally, as soon as we got close to this level, it literally dropped. It dumped all the way back to the bottom, right, to pretty much flat. And so it just kind of goes to show that stocks, they move in weekly expected moves, they move in monthly moves, and they move in quarterly moves, especially because it's based off of ER. It's based off of earnings performance, right? So it's important to figure out what was that expected move for the week before the week starts. It's important to figure out what's that quarterly expected move before the new quarterly earnings season starts, right? As soon as they release earnings, you want to wait for IB to settle down, get back to normal distribution levels, and then figure out what that quarterly expected move is, because those are things that you want to target. Okay, I'm going to show you an example here of using or quarterly expected moves. This is just for the week base, right? MDB was a great short-term trade, but I want to show you one where Amazon and a lot of these other tickers have already hit a lot of their bottom quarterly move. You can see here, it doesn't mean that it can't go past further. Okay, what this means is that this is kind of now at this point, Amazon is oversold. You can see here, I have them labeled here as QEM. This is just an acronym for quarterly expected move. You can see here that before this, and right now the market's a little bit volatile, but if we look at the daily time frame, when we hit this quarterly expected bottom, it's been ranging. It's literally been ranging. Yes, it's below maybe just like what, uh, 5, 6 points low, right? But nonetheless, it's pretty much ranging with this zone area right here. Okay, it's really not that far. Now in the option world, that could be kind of far, but when you're looking at the equity itself, it's pretty much there, right? When the market starts to pick up again, I'm looking for it to target back to the quarterly top move. These are areas that you might want to consider getting long options again, like maybe a leap, right? Quarterly moves are much greater than just a weekly expected move. So consider getting something long term. Get yourself time and buffer to let it play out, right? So this is just how we would use this is how we will analyze expected move with Gextron, right? Gextron will do its thing, it'll tell us what it is, and then it's just our job to analyze price and pick a strike contract that has enough time and that has a reasonable delta. That is how you find the perfect strike for an expiration. Know the expected move, pick enough time far out. If it's a week, maybe pick 60 to 90 days out. If it's quarterly moves that you're aiming for, get a leap contract, and then pick a strike with a reasonable delta, anywhere from 50 to 25 delta. And that's how you do that. Okay, that's how we did it with MDB, and that's how we were able to net a 50% return that day of. All right, I hope this was helpful. If there's any questions, put them in the comments down below. If you're interested in trading with me and getting the alerts, there's going to be some links in the description box Click on those if you want to trade with us or if you want to be part of the TGE Max family. All right, peace out.